how financial and healthcare stocks can swing the S&P 500. We're going to have some fun here talking about a couple of sectors that don't get a ton of talk normally. It's usually tech stocks, and more tech stocks when you're talking about the S&P or the NASDAQ, obviously. And we've been zeroing in on the S&P 500 index in recent shows to give you a little bit of, maybe what you're not seeing in the headlines. It's a lot of, Apple and Microsoft this, and Apple and Microsoft that, really the top weightings driving that S&P higher. But finance and healthcare, a little bit of an underrated part of this market in terms of how much weighting is attributed to these two sectors, garnering more than 25% between the two of them. And that's essentially the weighting for technology. I think technology right now is about 28% of the S&P 500. Both these sectors underperforming the broad market by almost 20% year to date. And we're going to show a pretty crazy chart in just a second to show you how the S&P 500 is able to be up 15% this year with 25% of its holdings, 25% of its weighting, that is, being down close to 5% still in the middle part of the year. Having, if we were to close the year tomorrow, this would be a great year for the S&P 500 as it averages about 6 or 7% to the upside. So being up 15 with a quarter of it dragging it lower, crazy performance. We'll get to that in a second, but just wanted to highlight some of these names because you do know some of these names, and it's not like these healthcare and financial stocks are, number 130 in the S&P and in that range there. I mean, we've got number 10, number 13, 14, 18 in these sectors with relatively significant weightings. Anything around 1% of the S&P 500, that's 500 stocks, is quite significant. And really, when you get out of that top 10, there are more tech stocks, obviously, but you really start to see a lot of these financials and healthcare. I mean, JP Morgan, Visa, MasterCard, AbbVie, Merck, Pfizer, Bank of America, and I'm talking about the biggest outperformer today in the S&P 100, Wells Fargo, not even on this list. So garnering a lot of weighting here, and between financials and healthcare, you add them together, and that is pretty much equivalent to the technology weighting. It's about technology is about 28% of the S&P 500, financials plus healthcare about 25%, and so near equal if you are getting into the SPY ETF or you're trading options on the SPX index. Or you're investing in, these different mutual funds or ETFs, almost all of them in some way, directly or indirectly, track the S&P 500. And so, a very important, underrated part of those investments and those trades is financials and healthcare. And you can see here that where the S&P 500 is going, of course, has a lot to do with technology. It's what we're battered over the head with almost every day. But if financial and healthcare stocks continue to drag on this market and technology comes off a little bit, 40% up here midway through the year is not quite sustainable. You can't expect 40% higher every 6 months in a sector like technology there. So if that drag continues and technology comes off even a little bit, you might see this S&P really turn around. That being said, it's almost like sprinting with the parachute on. If they can pick up even a little bit, and we'll make a case, I guess, for two sides of both these sectors in just a second, if they can get back to positive on the year and even build in what would be deemed average, like I say, 5 or 6 or 7% up on the average year, then this S&P might really sing at that point. If technology can hold on to 40%, then another quarter of this market can get back to positive and then some. That could be some really significant gains here for the S&P. But like I say, technology really, making up for the misdeeds of financials and healthcare here in 2023. And if that loses steam and financials and healthcare, trend even lower or just stay negative, might start to cough up a good amount of that 13%, 14% that we've seen higher in the S&P 500 in the first half of the year. Now, what's been going on here, financials is going to be a little bit easier of a story to tell. Because almost all of this downside is due to the regional bank crisis that we saw in March. And that brought the market from being, on track to, 10% higher move in the first quarter of the year here in financial stocks. They were up 8% at one point in just the first couple of months. So really tracking with that technology sector, so to speak. I mean, if you can produce 8% in the first 2 months of the year, feeling pretty good. They gave up all of that and then some. We're down 10% at one point in the midst of the worst of that regional bank crisis, and been able to climb back. It's actually been a really decent bounce back here as the regional bank crisis, still developing story, and obviously an important story given the fact that I believe it was 3 or 4 regional banks did end up folding off of that. I know at least 1 or 2 did, and so could still come out, develop further to the downside here. But, I think a decent case for if that's out of the picture and the bulk of larger financial stocks like JP Morgan and Visa and MasterCard, the ones that are in that, top 10 to 30 range of the S&P 500, if they're relatively unaffected, interest rates continue higher and financial companies are able to build off of what, should be a better environment for them here. You could see back to positive and the S&P able to build in even better, but obviously financials have been a pretty fearful sector, and that can reemerge at any point. But that's why we're there. And then also here in healthcare, essentially just a real slow start. In the same time that the majority of the stock sectors spent that first 2 to 3 months building in ground to the tune of 5 to 10% higher, opposite direction here for healthcare, and a little of this might be just losing some steam from past years. Healthcare was up 20% in 2022. And obviously some of those healthcare stocks doing quite well around pandemic and the stock market recovery out of the pandemic. So essentially just some slow action here in healthcare. And I don't think the case would necessarily be, if X, Y, and Z happens, then healthcare can skyrocket, whereas if A, B, and C happens, then it could sink, whereas, the story in financials is maybe a little bit more straightforward. But essentially, if you ask healthcare to just do what is average, an average year, get back to positive, then that would be a case for that S&P 500 getting closer to where its technology sector has been performing, whereas continuing to lose ground from the gains that were made in 2021 and 22 would continue to drag on that S&P 500. But either way, really always interesting to me. The headlines are always around, Apple's new products and Amazon's new delivery innovations and where they're going, and Tesla obviously re-emerging to becoming another, a big weighting in the S&P 500. It was up there at, 2% plus, got all the way down to closer to 0.5% when it was falling there. Now Tesla's back in the top 10. Obviously, big weightings, big important stocks, but underrated the fact that financials and healthcare make up a quarter of this S&P 500, and they're both in positions to really swing it to the upside, given that S&P's up closer to 10%. Technology, the biggest sector, is up 40%, and these two sectors could really swing it to that upside or to the downside. We'll see here in the second half of the year.